Ladies and gentlemen, welcome back to the channel. I hope you're ready for another exciting video. Yes, Tesla stock on Friday did well. It recovered some of that post-earnings sell-off, around 8% that we experienced. Now, if you're looking for a video that's going to tell you what's going to happen to Tesla stock next week or the week after, this is not that video. But what we are going to do in this video is talk the next couple of months, heading into the end of this year, into 2026, and specifically why I'm so bullish on Tesla. You do not want to miss this. Now, that's part one of this video. Part two of this video is simply a clip from Dan Ives reacting to Tesla earnings. And he, as you would expect, has very positive things to say. So the work is cut out for us here in this video. Hit that like button and subscribe to the channel if you have not done so already. If you have not checked out the link down below in the description of this video to come join the best trading community in the history of trading groups, that link is in the description of this video. We are going out finding these small cap AI winners before Wall Street does. There's a lot of criterias that these stocks have to meet. When they do, and when we can identify something that is, like crazy, Wall Street has not figured out on some of these companies, we invest in them. I've essentially been early to everything, all the major trends, whether it was data centers or quantum computing or even like something like HIMS, right? I was early to all of it. Big gains on all of them. And these stocks that we are investing in now, some of them I think could be millionaire kind of makers, right? 10, 20 grand into potentially hundreds of thousands of dollars. Again, I'm not a financial advisor. I'm not a financial planner. Contact one if you have any questions. And please, by all means, do not be a jackass. Do not consider what I say is a guarantee or financial advice. We could be hit by an asteroid tomorrow. You think I know any better, right? So come to your own conclusions. That's important. But with that said, check it out if you guys would like to join it. And let's get rocking and rolling in today's episode. So to make this really easy and to make sure we don't waste time and you get the information that you need or want and, again, get on with your day, I've simply put it here. Reasons to be bullish on Tesla. Like, this is from now until the end of this year into 2026. And I think it's as straightforward as this, okay? There's actually 13 different things that I have listed here that I see as more likely than not going to happen. Okay, if there's like a small chance of something, it's not listed here, right? But if I can confidently say like, hey, this is gonna happen, or I think this is gonna happen, then I have it listed here. So number one, Model 2 is still coming. There was a lot of doubters, a lot of naysayers, a lot of bears heading into Tesla earnings that the Model 2 may not even be coming this year. Elon Musk basically said, it's coming. Now, what we got out of the earnings, just to be clear, is around September 31st, when the $7,500 tax credit ends, that's when Tesla is really going to start, deliveries of a cheaper Tesla. Essentially, to offset or to keep Teslas around the same pricing and even potentially getting cheaper after September 31st. Right, it's kind of to like bridge the gap between the incentives on a government level ending and not seeing prices of Teslas just skyrocket straight up. Okay, so that's still coming. Number two, market has not realized the AI potential of Tesla. So we're doing this in small cap companies, right? Let me give you a little bit of an example. In this one company, I am incredibly bullish on. I have like $50,000 invested in this small cap company. It's like a $700 million market cap. They are doing something that nobody else is. They started operations really commercially in April, and they're blowing past their own guidance that they set. Okay. Well, Wall Street doesn't realize just how massive that company could be. Okay, that particular company is trading around 6 to 7 times price to sales. If we look at BBAI, SoundHound, any of your other pure play AI stocks, they're trading at double or triple the valuation of this stock that I put $50,000 into. Okay? Why? That's the question. If they all have similar characteristics, in fact, this company I put $50,000 into is growing much faster than the others because they are essentially starting from the ground floor. Those growth rates are much better than the other companies. Why? Why is there such a large spread? It's because Wall Street does not realize the potential. They don't even know about the company yet. They don't even know it largely exists. Okay. In this specific company, 40% of the shares are owned by retail. Okay. 38% of the company is owned by insiders like the CEO and the board and people that work at the company, which is unusual in and of itself to have that much insider ownership, meaning like you and management are aligned the same way. Okay. They make money, you make money when the stock goes up, okay? Only 14% of the company is owned by private companies, like other companies taking a stake in this company. And only about 5% of it is owned by institutional investors. Now, that's why this particular stock is underlooked. Wall Street doesn't know about it yet. There's not a huge like retail investor community behind the company. They don't see the stock yet. Okay, eventually they will. And when they do, you'll see a rapid appreciation in the share price of this said company, in my view. Again, I'm not a financial advisor. But that's why that company is where it is. People don't know about it. It's pretty rare to see a $1 trillion company like Tesla be misunderstood. Typically, if you have a $1 trillion company, people are relatively on the same page about that company. Everyone's kind of on the same page about Google, Microsoft, Nvidia, Apple, right? There's no major surprises. Like what is known is known. With Tesla, it's different. I think specifically with Tesla earnings, they kind of lowered the bar across the board. They lowered the bar for deliveries. They lowered the bar for AI. The only thing they didn't really lower the bar for was Optimus. I feel, but Optimus is so far away still, like nobody's really buying Tesla stock for Optimus from a Wall Street perspective. Now, I think this does set up the potential to come in with better than expected deliveries, better than expected AI expansion efforts. Elon Musk said they're going to expand, the robotaxi network and scale that at hyper speeds. Okay. Nobody paid attention to that, even though it was right there on the conference call. Now I have here number 3, robotaxi expanding to 5,000 units next year. Wall Street at probably 200 to 300 expected. Okay. This is pretty much unchanged from the earnings. It doesn't look like to me, people are analysts, have really high expectations at all for the robotaxi. This is where, again, some of that upside surprise is going to come from in terms of Tesla's AI prospects. And I think Tesla could have a couple thousand robotaxis out on the road next year, which is not gigantic, but 5,000 would be almost 10 times larger than Waymo's business. Okay, just to put a little bit of comparison to that. Now, Optimus is not dead. There was a lot of false news stories in the past couple of months heading into Tesla earnings, people leaving the company in the Optimus division that Tesla's not focusing on Optimus anymore. That was obviously proven not correct. Elon Musk said he would be shocked if Tesla was not producing 100,000 units per month in 5 years, over 1 million units per year, 5 years from now. Okay, so that's number 4, pretty straightforward. The stock doesn't really trade based on Optimus yet. It's too far out with rates as high as they are. Like if rates were at 0 today, I think Wall Street may actually care about Optimus, but they're not. Okay, number 5, Elon's new comp plan will bring a new Elon Musk. Pretty straightforward. Okay, Elon Musk with a comp package operates differently than Elon Musk without a compensation package. And Elon without a comp package doesn't really care what happens to the stock. That's the bottom line. Elon with a compensation package wants to get the stock as high as possible. Elon very much works in your favor when he has a comp plan. Pretty straightforward. The shareholder meeting is on November 6th. I'm sure we're going to be voting on a new comp package, and it should be passed on November 6th. Effectively, you're probably going to get a new Elon from November 6th forward. Okay? Maybe even before. Who knows? Number 6, 8 rate cuts next year largely benefits car companies. I think a lot of people are forgetting this. A lot of Wall Street focuses on Tesla's hard delivery numbers. They don't care as much about robotics and AI and blah, blah, blah. But if we do get substantial rate cuts next year, doesn't that benefit car companies more than others? As I said in the last video, there's a lot of people out there, I believe, that bought cars in 2020, 2021, 2022. People that I even know that would love to get a new vehicle, but the payments would be a couple $100 higher than they were before, right? And they can't really afford to do that, or their ego won't allow them to do that, even if they could, to some degree, afford it, okay? I think that is an underrated, potentially surprise positive that people are not really talking about. Number 7, the big beautiful bill. 100% tax depreciation on CapEx. Writing off interest on cars. No tax on tips up to $25,000 and no tax on overtime up to $14,500. Again, this on one part, 100% tax deductions on CapEx is great for AI and capital expenditures, right? CapEx just means investing money, right? If Tesla wants to build a new data center, they can write off 100% of that. Okay. Really just means I think you're going to continue to see a lot of AI investment. I think you're going to continue to see this economy chug forward. Interest on cars write off, no tax on tips, no tax on overtime. That's going to help out the consumer, potentially give them more money to go out and spend. Again, support the economy, but potentially some of that comes back to companies like Tesla when individuals feel like they can afford, a vehicle again. Number 8, economy avoids a recession. Pretty straightforward. I think the economy is going to avoid a recession. Number 9, AI adoption ramps and use cases grow. I think over the next 24 months, in general, but really heading into 2026, we're going to have an AI super cycle. We're going to have a wave of AI investments. You can already see this in venture capital. What are funds doing? They're going out and investing in AI companies more than ever. I think I read something today. 70% of venture capital is into some degree related to AI these days, right? There's a lot of money going into these areas. There's going to be a lot of adoption that grows. Adopt or die, essentially. And that's going to continue kind of like a feedback loop to feed the markets, right? Number 10, a Cold War with China. Pretty straightforward. We are competing amongst ourselves in terms of companies, right? Google is competing against OpenAI. OpenAI is competing against XAI. Software companies are competing against other US-based software companies. But you also have this Cold War with China that means country-to-country competition. Like, for an example, some of the statements that Trump has made recently about AI, about deregulation of AI, some components in the big beautiful bill are very much AI friendly to continue to grow AI. And that's not going to change for a very long time. And friendly competition with China, like a Cold War, much the same thing as like the Soviet days Cold War, right? We wouldn't have had a lot of the technical advancements we have today as fast as we had them without the Cold War. Semiconductors and even things like microwaves and obviously space, right? There was a lot of innovation basically everywhere during those 40, 50 years of Cold War. Now, trade war and geopolitical issues end. I think that's going to become a back burner story by the end of this year. That's going to be a positive. Get that out the way. Number 12, Elon will set the stage for over deliveries. So basically on the conference call in general, with this last earnings, the conference call, again, I think the bar is really low. And I think Elon sets the stage or set the stage for upside surprises to Tesla, whether that's deliveries or robotaxi or other energy storage, right? They even said like that could be a little bumpy, right? So I think expectations are so low that it's not going to take a lot to give you an upside surprise. And specifically, I think there's room for upside delivery number surprises. So I think potentially Wall Street is too low on their numbers for next year. And if we do see a strong Q3, which I think we're going to, and we see a strong Q4 heading into 2026, maybe expectations need to go up for, what Tesla deliveries numbers could look like. Think the Model Y L, the Model 3 Plus, the cheaper vehicle coming. You could actually see an upside to delivery numbers and potentially surprise the markets. Although I think deliveries are going to start mattering a lot less, it does matter still at this stage for Tesla. And while it's very hard to say exactly what happens in the near term, these are the reasons why I'm bullish on Tesla. Like, there's not a strong bear case for Tesla stock at all at this point. Unless we go into a recession, unless Elon goes off the deep end, politically speaking, or, robotaxi fails, there's accidents, fatal accidents, something like that, then obviously that could be short-term problematic. But without any of that, the case to own Tesla is very, very strong. Okay. And while I don't know exactly where that will lead us in the next month or two, I can confidently say in the next 12 months, I think you're going to kick yourself for not buying Tesla in the low 300s. Whether the stock's a $500, $600 stock, $700 stock, not exactly sure. But even again, with interest rates coming down, that's going to directly benefit Tesla. That's going to directly benefit risk on areas like Tesla. Especially mix that with expectations, a bar that's already really low. Like, you want to buy a stock when the expectations are low. I don't know how they could get much lower from here without some kind of economic issue. And then at that point, Tesla's not the only issue. It's going to be basically everything else, right? So those are some of my thoughts. Now, take a listen to this clip on Bloomberg from Dan Ives. It says Musk is the biggest asset for Tesla. He also goes into quite a few other topics in regards to Tesla. So take a listen.
Average selling price down, and yet you're at $500. Tell me why.
Yeah, I mean, look, the quarter itself, nothing to write home about. But I mean, our view, it's about autonomous robotics. AI is the future for Tesla. So to me, yeah, it's a rough few quarters ahead. But I believe autonomous, we are in the beginning. What's going to be $1 trillion valuation alone for Tesla. So that's why I don't get so concerned when we talk about deliveries, which actually were kind of in line. When we look at what's going to happen in the second half, the story here, when it comes to physical AI, two best ones out there, it's going to be Tesla and NVIDIA.
Moving from a pre-autonomy to a post-autonomy world. Did he do enough on the call last night to convince investors that it's going to be smooth sailing?
Look, I mean, obviously the call, definitely some could have criticism in terms of promising so much. Look, my view is if 20 to 30% of what he promised you see in the next year, this is a stock that's up 70, 80% from here. So that's why when I look at Tesla, I don't focus, and we've talked about it so much in the show over the years, I don't focus near-term deliveries, what that means in terms of EV tax credits. This is an autonomous robotics story. And I think, look, the AI revolution, as we saw from Alphabet, I mean, we are just in the early days of this playing out.
Maybe I'm Chicken Little, but I was looking at this press conference. I was reading this and I was thinking, this is a disaster. I mean, essentially, this was a dream stock, and suddenly they're talking about tax credits and things of that nature. They used to talk about an affordable vehicle. Now they're talking about a stripped-down Model Y that doesn't sound that sexy at all, and they're going to expedite production of other vehicles and put that on hold. What would it take for you to get bearish?
Yeah, look, I mean, you bring up great points, and that will be the bearish points. And when it comes to the affordable next vehicle, is that just going to be a stripped-down version? Look, Lisa, my view is that it comes down to like robotaxi. If you're in 25 cities in the next year, and you actually start to get volume production of Optimus when it comes to robotics, I think 90% of the future value is going to be in the AI story, not on the actual deliveries in terms of cars out there. You have 10 million vehicles in terms of Teslas out there. It's all about the data. And I believe the big thing is going to be the shareholder meeting where they'll have a significant investment in XAI. And I think that's where you get more of a wartime CEO in Musk. And I think that's really going to be the difference.
Were you satisfied by his answers about XAI, about the investments there, the crossover with Tesla? Because there was a lot of ambiguity.
Yeah.
And he was asked that directly, and he wasn't able to explain that connection and how it really does rebound over, other than some people who are in this industry don't really want to work at a car company. I want to offer them an opportunity to.
Yeah, I wouldn't say, like, that conference call is not, you wouldn't put him in the Neary Hall of Fame, that conference call, okay? But again, we know, like, with Musk, it's never going to be, it's not going to be Microsoft-like. But my view is, and we've talked about it, like, the board, they need to get him 25% voting. I think that's key. That starts what's going to be a significant investment in XAI. But we've said also, are there guardrails there that they need to put on? You've seen them become less political since the July 4th third party, too. So I think, look, you want to see him less focused on that, more focused on being CEO, because it comes down to, like, the biggest asset for Tesla is Musk.
The press secretary yesterday was asked, does the president support federal agencies contracting with Elon Musk's AI company? Her answer, I don't think so. No. Can he do this without contracts?
Look, I think, but then it comes down, look at Grok. I mean, when it comes to Grok, and a huge part of the DoD deal, look, the reality is that Trump administration could say what they're going to say, but they need Musk. Of course, they need Jensen. I mean, they're going to need leaders when it comes to, of what this AI revolution. I think, look, that's the reality. And I do think at one point you'll start to see them, I wouldn't say necessarily become friends again, but sort of mend fences.
So go ahead and let me know your thoughts on that and all of what we discussed in this video. Hit that like button as well as subscribe to the channel. Again, check out that link down below in the description of this video for the trading community as well. Again, don't be a jackass. It's not financial advice. I could be wrong. I could lose all of my money. Don't come to your own conclusions. If it makes sense to you, it does. If it doesn't, you can always poke holes in the thesis. I actually recommend that, because sometimes it feels like things can be too good to be true. And normally when they are too good to be true. Sometimes they're just underlooked, underloved, underappreciated, and well, it's not too good to be true. So let me know your thoughts again down below in the comment section. Have a great weekend, and I will see you in the next one.